Colleagues, what is an accrued expense? Before we read our question here. Hey, sure, no, but I think amongst these adjusting entries, I think accruals have talked about them the most. Yes. Oh, sorry, could you just speak a bit louder? I wasn't able to get you. Uh-huh. Yes. You're correct, sir. You're correct. Okay. Yes, you are correct, sir. Accrued expenses, sir. The expense falls due, you do not pay it. Let's say rent expense falls due, you don't pay it. It has to be recorded. The next month, it doesn't. It rent falls due, you still don't pay. It starts building up because with these accruals, they also build up. If you don't pay it, it will start building up as time goes. Okay. So accrued expenses are treated as current liabilities because you are owing. Okay, you are owing. So remember this. Okay, please remember what I'm about to say. Okay, so for accruals, accrued expenses. Okay, on the statement of profit or loss, you are going to add it to the expense you see on the trial balance. Okay, and then on the balance sheet, you're going to include it as a current liability. Are we okay with that? Has everyone heard? Are we okay with that? What accrued expenses? Okay. Yes. On the statement of profit or loss, okay, you add the accrued expense. For example, on the trial balance, you might have rent expense, maybe 1,000. Then there will be an accrual of 200. So on the statement of profit or loss, you add that accrual to the expense, the rent expense. Okay. You're going to add the accrual to the relevant expense. Then on the balance sheet, you are going to include it as a current liability. I hope we have our T accounts here because with this question, not only are we going to show the extracts in the statement of financial position and statement of profit or loss, we also go through some of the journal entries so that we're getting accustomed to the double entry rules. Okay. So before I proceed further, have we got that point? Because what I'm explaining with this example is that same point. It boils down to that point. Yes, Madam Sylvie. Mhm. Trial balance, trial balance. No, no, no. It's not. is not the total amount, it's just the accrual. So if that accrual is 200 kwacha, you're adding it in the statement of profit or loss, then in the balance sheet, you put 200 kwacha. So it's a very important point you have brought up. Thank you, madam, for bringing that point. Okay, colleagues, please do not, that total amount which you've put in the statement of profit or loss, please do not transfer it to the balance sheet. Okay. Because in that amount, there's a part of it that has already been paid. So it's not a current liability. Okay. Yes. Any other questions? So no matter how, if this example gets confusing, just what you must remember, accruals add, okay, both accrued expenses and accrued income. Then accrued expenses, current liability. So now let's go to the example. Okay. Okay, so Mwana's business has an accounting year end of 31st December. He rents a factory at a rental cost of 6 million per quarter payable in arrears. During the year 31st December 2004, his cash payments for rent were as follows. March 31st, 6 million. So this was payment for quarter one. Because remember, this rent is being paid in quarters. And in a year, there are 4 quarters. Okay, so in March, you paid 6 million. In June, you paid 6 million. In October, you paid 6 million. Okay. The final payment due on 31st December 2004 for the quarter to that date was not paid until 4th January 2005. So you are required to prepare the transfer to the profit and loss account and the balance sheet extract as 31st December 2004. Okay, so colleagues, with this type of questions, first thing you have to ask yourself is how much should be paid in total for a year? Okay, because once you figure out, okay, how much has to be paid in total for a year, then you're going to review how much has been paid, and then you're going to be able to determine the accrual in there. Okay, so colleagues, rent is 6 million per quarter. So how much does this person have to pay for rent in total for a year? How much is the total amount for rent? Mm-hmm. Because it's 6 million per quarter, okay, and the year has got 24 million. Yes, 24 million. Then we find out, okay, now how much has been paid in total for rent? We've only got 3 payments here, okay? March, so this was for quarter one. June for quarter two. October for quarter three. So how much has been paid in total? 18 million. So how much is the accrual? Thank you. We can even end the class here, right, colleagues? That was, you did it so easy and well. We can even end here. Madam Helen, we can even end here. It seems the course. Mr. Vincent, did you see how well we've answered this? Huh? Uh, Flawlessly. Okay, wonderful. So let's do the, before we make these extracts, okay, let's just see what is going on so that we get accustomed to the double entry rules, okay? So colleagues, when this was paid in March 31st, 6 million, what is the journal entry for this? When you pay for an expense, remember the T account? I hope we have the T account with all of us. Yes, so you debit rent expense thing. You debit rent expense. How much is this? 6 million. Then what do you credit? Remember, you're paying for an expense. Let me just bring the T account here so that we remember how to use it. Just hold on. But in the meantime, as I'm doing this, what are we going to credit? What did you pay rent with? Yes. So you credit cash. Okay. You credit cash. Okay. Expenses, assets, drawings on the debit side. Okay. These accounts, any expense account, asset account, drawing account increases with debit. So here, rent expense increases with debit. So you debit rent expense 6 billion. Okay. So rent expense is an expense account. Okay. Then cash is an asset account. Okay. An asset account, since it increases with debit, is going to reduce with credit. Okay. It reduces with credit. So that's why we're crediting cash. Okay. So this is there. So cash 6 million. Okay. So this general entry will be done also for June and it will be also done for October. Okay. So in the rent T account, okay, let's look at the rent T account. Okay, rent, you put 6 million here, another 6 million here, another 6 million here. Okay. And, is that a question? Did someone raise their hand? I heard the hand raised thing. Okay, so we continue. Okay. So the inexperienced accountant will put on the trial balance, here trial balance, they'll put rent expense 18 million. So then that company will hire one of you, maybe Mr. Vincent, maybe Madam Sylvia, maybe Madam Beth, to come and say, okay, come and look at our accounts and make us a financial statement. Okay. And then you go through the accounts and you see that, only 18 million has been paid and 24 million is what is due for rent. So, colleagues, what would be the adjusting entry? Okay, Madam Betha, you've been hired as an accountant and you found, they recorded 18 million, but there's an accrual here of 6 million. Okay. So what would be the adjusting entry to realize that you have an accrual. So, okay, yes, yes. Yes, you do that. That's correct. But we're coming to that first. Okay, but I'm just asking for the journal entry. But you're correct. That will be done. That will be done. But I'm just saying, what would be the adjusting journal entry to acknowledge that there's an accrual, that you've got a current liability pending. So the adjusting journal entry, okay, is going to be, you're going to debit rent expense because you have incurred that expense, whether you have paid it or not. Okay, you debit rent expense. But since no money has been paid, okay, since no money has been paid, you're going to substitute cash with a liability. Okay, so rent payable. Okay, if we go back to our T account, remember liabilities increase with credit. So here we have recognized we have a liability. Okay, so your credit rent payable 6 million. Okay, so what this journal entry is telling us to do is this debit we've done here is the one which Madam Sylvia said. We're going to add it to the rent expense in the statement of profit or loss. Okay, this debit entry is adding to statement of profit or loss. Okay, in this credit entry, okay, you're realizing that you've got a current liability. So on the balance sheet, okay, adding to balance sheet as a current liability. Okay, so this is the adjusting journal entry. Okay, to recognize that you've got an array, an accrual. Yeah. Any questions before I put on the trial balance and balance sheet? Any questions? Okay, so on the statement of profit or loss, okay, that debit entry, as I said again here, from that adjusting journal entry, that debit entry 18 plus 6 million, it now becomes 24 million. Okay, then that credit entry, you open the accrued rent account here, 6 million, that credit entry. So where did I put it? Yes, this. So in the statement of profit or loss, you add the 6 million represented by the debit journal entry so that the true amount is reflected. Okay, because as I said, with these type of questions, they'll put it on you have to find, it's not always going to be a year. Sometimes they might give you might pay for this midterm. Okay, so what you must find out first is how much of the expense has been incurred for that period. Okay, so if it was for, if you paid between the year, okay, maybe paid in, maybe in October. Okay, you find out, okay, for October, November, December, how much is has to be incurred. Okay, and then once you find out how much is required for the period, then you can be able to determine your accrual. Then in the balance sheet, And the current liabilities 6 million. Any questions? Okay, now we have accrued income, okay, which is the opposite of an accrued expense. Okay, so colleagues, what is accrued income? Madam Sylvia, accrued income? Mm, yes. Okay. Money now, this is money being owed. Yes, Mr. Twambo? Thank you for your contribution. But it's not always specifically interest, okay? It's not only restricted to interest. As Madam Sylvia said, you do a service for somebody, okay? Maybe you're supposed to be paid on a monthly basis, okay? You do a service for someone. The first month passes, you don't receive any money. You know you have to record that. In accounts, you have to record that. The next month passes, you still haven't received money, you record that and it starts building, okay? It's the opposite of an accrued expense. Okay, this time it's your money that is being owed to you. Is that okay, Mr. Trump? So if it's interest that is being owed to you and the person hasn't paid the interest for this month, okay, that would be your accrued income because that's your interest income. So accru- accrued income is a current asset. Okay, it is a current asset. Okay, so in a year, you're supposed to receive rent of 20,000, but you've only received 18,000 that year. What is your accrued income? 2,000, 2,000, yes. Mhm. Okay, so now, as we always say, want to see the whole story, okay? So, when you are paid this income, what will be the journal entry? Okay, let's say when you receive this 18,000, what was going to be the journal entry? Yeah, a landlord. Okay, this person pays you pays for usually pays for a year. Now this year, you're surprised is shorter. This only paid 18,000. What are you going to record as your journal entry? Last year you paid 20, the other year 20, now this year 18. What would be your journal entry? I believe we have landlords in here, colleagues. How do you record? Or you just get the money and just say, okay, paid, and you just remember. Hmm? So remember this thing: when you're getting here, the transaction is you're receiving money. So which two accounts are going to be involved? Mm-hmm. Uh-huh. Yes, you've got it correct. Okay. So the rent account, you call it rent received, because usually in accounts, to notify that it's an income account, it usually has the received word on it. Okay. So, Madam Sylvia, you are correct. Okay. Your debit cash account. Why? Because money is coming into your pockets. Okay. Money is an asset. Increase in an asset, you debit. Okay. That money is your income. Okay. And remember, we have income stroke revenue here on the credit side. So income revenue increases with a credit. Okay, so you debit cash and you debit rent received. Yes, is that a question? Is that a question? Okay. Now probably the one who's taking the journal entries, maybe they are not aware of this. Okay, so they make it a trial balance, and you find on rent received in the trial balance is 18,000. Okay. They try to make financial statements and then they get surprised it's not balancing. Then they call you Mr. Twambo. Mr. Twambo, we have a situation here. Um, we recorded our rent, which we received, although the money was short by 2,000. So we need your help to make the financial statements. Okay. So you come and then you're going to say, oh, since there's 2,000 that is being owed to you, there's an adjusting journal entry that I need to make. Mr. Trumbo, what would be that adjusting journal entry? To record that you have an asset in the form of accrued income. Oh, okay. We can give it a try. Think of the first journal entry, but this time instead of you're not getting cash. So what will replace cash? Madam. No, no, no. No, I'm saying what would be debited instead of cash? What would be debited? You credit rent received, okay? Because that money is earned by you. So you credit rent received, increase in income, credit. But since you're not receiving cash this time, what will replace? Yes, Mr. Frederick. Rent receivable. Okay, you're realizing that you have a current asset from in the form of accrued income. Okay, so you are going to debit rent receivable. Okay, so you're adjusting entry. So this adjusting entry is even going to tell us what to do in the financial statements. Okay, so adjusting entry, you're going to put rent receivable. Okay, this is money being owed to you, which must be paid. Okay, so debit rent receivable 2,000. So this debit entry is in the balance sheet. We're going to record this rent receivable as a current asset. Okay, so this debit entry means adding in the balance sheet as a current asset. Then here, yes, you're going to credit rent received. Okay. So as I said, with accruals in the statement of profit or loss, whether it's accrued expense or accrued income, both of them you add. Okay. With prepayments, whether it's prepaid expense or prepaid income, both of them you subtract. Okay. Just remember that prepayments, subtraction, accruals, adding. Okay. The only differences come in the balance sheet now. Okay. So this rent received 2,000 here. Okay. So this you're going to add, okay, to the in the statement of profit or loss. I think in the assignment question, even there was a rent receivable. Okay. We added it to the rent expense. Was it rent? We added it to, I don't know what income we added it to, and then we put it as a current asset in the balance sheet. Yes. So here, statement of profit or loss, 8,000 plus 2,000. Okay. So that it reflects the true amount that has to be earned. Okay. 20,000. Balance sheet under current assets, rent receivable 2,000. Yes. Not 20,000, 2,000.